Hi everybody, this is part 2 of our sentiment timing video recap for Wednesday, April 29th. So yesterday I put out our Series 1 video and I was talking about overtrading, and if you're a position trader or a swing trader, you don't have to be in the market every single day, because when you do, you're just increasing your odds of losing. You want to be in a trade when you have the odds on your side, when you know there's a turn date that's coming, when you know sentiment was at extremes, and when the technicals are making sense. And that's really when you want to do it. So tonight I'm going to go over trend duration analysis and my trading process, what I do, my checklist, and then whether it's safe to be buying or should you be shorting. So trend duration analysis. We know that how investors feel is the sentiment. How investors act is the price. In 1985, Woody Dorsey developed the trend duration analysis, and really it's a study of behavior of price trends and how long they last, because it's the attention span of the market, and these cycles or durations, they seem to repeat over and over. And when you use them on different time frames, a short term, an intermediate term, and a long term, it's going to project different time frames. And that is how Woody is able to tell me and the subscribers when to expect a top and when to expect a low. It's from this trend duration analysis that he does. So I'm not going to go over all of this because what I'm going to do is send you the link to it and you could read it. And it gives you some great information, but instead I'm going to go over how I use it, and I don't do it myself. I follow Woody because he's the one who developed this in 1985. So why do I want to be matching up charts with highs and lows and trying to predict when the market's going to reverse, when I have the person that created this and developed this entire system telling me when it is? It just makes sense. I'd rather do other things than that and possibly look for better trades. So in yesterday's report, Woody had said that the rally is more mature than anyone realizes, and it may end in a whimper rather than a dynamic breakout. So perhaps Monday, the trade to 21.26 was the upside whimper. That door is open. We're not saying it is, because we already know when the turn date period is. Now, yes, we are in that window, but things are, they could extend. So we're not saying that exactly it. But once we get into this turn time, the turn down level period, then yes, we're probably going to get a very, a move to the downside, and that's what we're looking for. So the trend duration that he was talking about was the 18 trading days, and that was from the February 2nd low to the high, and that is exactly 18 days where we made our previous high, and I'm going to show you that in a chart right here. So this was the February 2nd low. This is 18 trading days, this box. Really don't have to worry about the size here. It's really the width, and each one of these is 18 trading days. So if you notice the gray, it was a common 18 days. Right from there, we made some kind of top within it, and it was usually within that price range too, and then headed down. Same thing here, and this is the expectations of where we are now. So this right here was a double cycle, let's say, and that was after we had that big September puke, so it made sense that it would ran a little bit longer than the 18 days because everybody was bearish on the markets. So what I do when I go over my checklist for trades, the main thing that I want to know is, when is this trend scheduled to reverse? Now, again, I can do my trend duration analysis myself, or I can have the master tell me when it is, and let Woody tell me what to expect, what he sees, and whether I should be looking to buy or sell. The next thing I want to look at is the sentiment temperature, because I want to know, are there enough bullish traders to mark some kind of top? on the expected turn date, or is there enough bearish traders to mark the expected bottom of the turn date? So looking at where the sentiment is, it's all part of the newsletter. You know the when, and you know how people are feeling about the market. And my next thing I do is I want to look at the technical view. Where are there bearish divergences that are supporting a turn? Where's the support level and everything like that? So in this chart right here, the dots are pretty much the exact dates that Woody was saying to look for either a high or a low. And what I do from there is, again, this I'm showing you this one right here because this is showing you if I just used a technical view. So here we had bearish divergences. This is going back into August. And a typical technical person would have been shorting, but they would have been caught on the short side for many points on the S&P. I knew that the top was coming in September. We had bearish divergences, and we had a massive move to the downside. Sentiment back then, we saw a series of 90s, so everybody was bullish on the market. And again, we had our turn period, and we had bearish divergences. This was your short. So this was our expected low date. We had bullish divergences before the last puke. And if we just look at what sentiment was doing there, everybody was bearish on the markets. So this was telling me that, okay, the low, we want to start looking for a low. We had the date, and obviously from there we had a massive rally. Each one of these was, the exact from our newsletters, not the trades, but whether you should be looking to buy or sell. And this was just the messy part where nothing was, that there was no trend in place, and that's where we're seeing everybody getting very, very frustrated about the market. So the thing is that we have been, as far as, picking these exact dates or close to them, because we don't want to be anchored to a date. Woody is the best at it. And like I said, just going through a checklist like this, knowing when the turn is supposed to come, what is the sentiment temperature, and then doing your own technical analysis, or you could send me an email and ask me to help you out with it. But in any case, this is where we're putting the pieces together, and this is where you make consistent profits. And there's times that things are going to get messed up, but you're going to know right away. And that's that's the beauty of watching or listening to someone like Woody Dorsey, because he's been in this doing this for over 35 years, and there's not many people out there that have been able to consistently predict when the highs and lows are coming, and where you're able to make trades off of this. So this is part 2 of our series. Hopefully it helped you out. Hopefully I showed what I do as far as making my trades, and like I said, if I wasn't co-publisher of Sentiment Timing with Woody, I would be following him no matter where he is, because I've been doing it for over 10 years, following Woody Dorsey, and it's I don't know if I would be able to do this on my own, not knowing exactly when these trades are going to, when the reversals are supposed to be taking place. So with that, until part 3 tomorrow, have a great night, and I will see you guys tomorrow.